Hello everyone, so today we are going to learn the accounting equation. This is the accounting equation. Assets equals to liabilities plus capital. This capital sometimes is called owner's equity. So we are going to first know what does each of these words mean. First of all, what are assets? They've said here, assets, these are resources controlled by the enterprise as a result of past events and from which economic benefit is expected to flow into the enterprise. These are actually resources. They can be in form of money, they can be in form of other assets that are not movable, and therefore these assets most of the times are divided into, we have what we call current assets and what we call the fixed assets. The fixed assets, these are assets which are not, these are assets which actually take a longer period of time. For example, maybe you buy a company vehicle that transports, maybe if it's a bakery that transports the buns, that is actually a fixed asset. You buy land, this land here will be used, we shall get economic benefit over even a long period of time, not immediately. But current liabilities, these are short term, normally less than 1 year. These are assets that are actually used in the day-to-day running of a business. For example, if you have stock within the company, this is actually a fixed asset. I mean a current asset. We have cash, the money that we have at the bank. These are used for everyday transactions. Then we go to liabilities. A liability is a present obligation arising from a past event, the settlement of which results into cash outflow of economic benefit from the business. These are actually obligations that we have to pay, money that they demand us. For example, a bank loan we got like 5 years ago and we are keeping on paying an installment. That is actually a liability. If we get a bank loan to finance our businesses, that is actually a liability. Maybe the money, maybe if we get goods from credit, we have to actually pay them back after a given period of time. So that makes them a liability. We also have what we call the current and the non-current liabilities. The current liabilities, these are the everyday to-day liabilities. For example, if I borrow goods and then I tell a creditor, I tell this person I'll actually pay them back after a given period of time, maybe 1 month. It is actually current. You can't tell a person you will pay him back after maybe 2 years after him supplying you goods, Then we have the non-current one. This one's over a long period of time. Bank loans of 5 years that a business gets to finance. Maybe it wants to buy land. That is actually non-current liability. Then we have capital or equity. This is the residue of assets. This is the residue of assets after deducting all the entities. The residue of assets after deducting all the entities' liabilities. Capital, this is the remaining. Maybe if I get a loan and that is maybe 45 million and then I make money and then I pay back, what actually remains, the 45 million after me making me money and paying some money back, those are actually the capital. Maybe if I buy, if I'm having a machine, maybe a washing machine, that is actually my capital that I'm using for the starting of the business. Are we together? So we are going to look at an example of an accounting equation question and how to do it. This is the question that I have. I actually copy it down or screenshot it. They're saying the following transactions are related to Karamoja Mabati Trading Group from the month of February 2023. Are we together? And they're saying, and so we are starting the question. So they've said, if we look at our first part, they've said, beginning business with 15 million in the bank and bought his personal motor vehicle worth 30 million to be used in business. So we first write down the accounting equation, which is assets equals to liabilities plus owner's equity, or you can call it capital. Are we together? So they've said the first one, that he began business with 15 million. Are we together? So if he began business with 15 million in the bank, so that means in the bank, that means here in the bank, because he began business in the bank, it will be 15 million. Are we together? And they've said and bought a motor vehicle worth 30 million. So that is a motor vehicle. The vehicle he bought, it's worth 30 million. So it is also an asset, giving you a total of 45 million. But this side, it's not a liability, it's actually capital that he uses to start the business. So this is capital of 45 million because it should be two-sided. It cannot be only one side. That one you should know it. What happens, this side should also affect this side in some other way in order for it to balance. That is the first one. So 2, they are telling us he purchased Mabati for sale at shillings 10 million by check, which were kept at the warehouse. So when he actually purchases Mabati, we see Mabati is actually stock because he's is transacting in what? In iron sheets. So the Mabati itself is actually stock. So that means he will purchase stock of 10 million by check, and then the bank will actually reduce since he used a check. That is actually reducing on the bank money. So that means if we are to do that, the bank actually, at this case, because these are assets equals to liabilities plus equity, the bank, since he purchased Mabati at 10 million, it will reduce the 15 million by 10. Are we together? So the bank will remain 5 million. Are we together? And we shall have stock now, which is the Mabati, at how much? At 10 million. Together. But we also have our vehicle, which was at 15. Our vehicle, which was at 30 million. So giving us 45 million. But still, this should be equal. To this side, we have owner's equity, which is our capital. Our capital, which is 45 million. It has remained unchanged this side. So here remain with 45 million. Are we together? Then 3, they are telling us he bought a computer of shillings 2 million for the office and paid by check to the supplier. So computers are actually assets to the business. So when he bought a computer worth 2 million, are we together? But he paid by check. That means he used the bank. So the bank still will reduce because he paid. This is 2 million. 2 million minus 5 million, remain with 3 million. So the bank will remain with 3 million. Are we together? This is our stock. It's 10 million. And this is our vehicle. 30 million. Are we together? So this is still 45 million. Remember, we said this should always be equal. And this side, our capital, is actually 45 million. This is our capital. Just remain with 45 million. Are we together? Then question 4, they're actually telling us now, part 4 they are telling us, obtained a bank loan from DFCU Bank worth 30,500,000 and was deposited to the bank account. So when he obtains a loan, that means our bank will increase because this money is an asset to us. But again, it's a bank loan. So a bank loan is actually a liability. So on the liability side, we shall put 30.5 million, but again, we shall increase our bank by 30 million because that money has gone to the bank account. It means the bank account, which was 3 million, will actually be increased by 30.5 million. So we shall remain with 33, and so 500,000. Are we together? And on this other side here, actually, on this other side now of liabilities, we have now a loan of 30,500. Are we together? And our capital has remained as 45 million. Are we together? So here, that means we still have our computer of 2 million. Are we together? We still have our stock of 10 million. Are we together? Then we have our vehicle of 30 million. So the total actually is 45 million. Are we together? No, it's not 45. When you add here, this is 33.5. 33.5, this is 33 at 4, 35, 35.5, 45.5. So if you add 45.5, you actually get 75.5 million. So actually, still here, when you add this is 3 plus 4, it is 7. So here we shall also have 75.5 million. Then 5, they're actually telling us here, withdrew cash of 2 million for business use. These are actually two transactions. So when he withdraws cash, that because they've told us here withdrew cash for business use, so that means we shall have a cash. That means we shall have cash increasing by how much? By 2.5 million. But bank will have to reduce because we withdrew from our bank account. Bank will have to reduce by this 3.35. When you subtract 2.5 million, remain with this is 31 million. And together, then we bring back the rest that have not been changed. We say our computer has remained with 2 million. Our stock is still 10 million, and our vehicle is still 30 million. So the total here, because he withdrew this for cash, if we try to add the total here, it will still remain the same, 75.5 million. This side we have a loan of 30,500 and capital of 45 million. So we go to 6. 6, they are telling us the owner picked mabati worth 4 million and used them to roof his family house. Are we together? So when he gets mabati, remember mabati is our stock. That means our stock is reducing because you withdrew mabati worth 4 million. So when you subtract 4 million, we actually remain with 6 million. Are we together? But this money here, it affects the capital because it is a drawing. So long as it is used for business use, for personal use, this money becomes a drawing. So our 45 million will have to be reduced by a drawing of how much? The brackets mean you're subtracting of 4 million. Are we together? So the rest will still remain here. We shall remain with our cash of 2.5 million, our bank of 31 million, our computer of 2 million, our stock, remember it reduced to finish it, then our vehicle will be of 13 million. When we add up the total here, this is 6, 7, 8, 8.5. If we add 8.5 here, it becomes 39.5. If we add 39.5 here, it becomes 41.5. And if we add 41.5 here, it becomes 71.5 million. Still here, sorry, we forgot our loan of 30.5 million. So when we add here, when subtract 4 million here, we actually remain with 41 million. Add this 30.5 million, we shall also have 71.5 million. Are we together? That's what we are remaining with. So when we continue here, because this is what we have, let's continue to 7. 7, they are saying the remaining mabati was sold to a customer on credit at a markup of 25%. That means that the remaining mabati actually, what are the remaining mabati, which is the stock, which is the 6 million, was sold to a customer. A markup is a profit of 25%. That means they got the money that they got. Let me try to calculate it here for you. That means they got this 60 million, this 6 million mabati that was remaining. Are we together? and they sold it at a profit, you add plus the profit to get the actual money that they got, plus the profit here of 25%, which is 25 over 100. Are we together? Because this is the money that they got, plus this is the interest that they got. They got an interest of 25% on the 6 million. So you can do it like that. Or many times, some people prefer to get, because this is the same as 125 over 100 times the 6 million to get the actual amount of money that actually this person got from selling this mabati. Are we together? So, but this is actually, because he sold them on credit, so that will go on the data side. That will be the money we shall be demanding. So when you get 125 over 100 times the 6 million, we shall get 7,500,000. It's still the same as this when you add it here. Are we together? It will be 6 million plus this, 25 over 100 of this will still give you 7,500,000. So, so that means we shall have, because our profit now, if this is our profit now, that means will be 7.5 million minus the 6 million, the amount that we sold them from, because this is the money that we sold it from, but this is the original selling price minus the cost price. That means we shall remain with, this is 0,051. It means we'd have made a profit of 1.5 million from selling on credit. So that means our debtors, those who we demand them 7.5 million. Are we together? Because we sold the mabati, the remaining mabati, so we shall no longer have stock. Are we together? That means we also have cash of 2.5 million. Then we have bank of 31 million. Then we have computer of 2 million. Then we have our vehicle of 30 million. Then on this other side, we had our loan of 30.5 million. Our capital, remember, it was reduced. Now it is actually 41 million. Remember, it was reduced by 4 million. 41 million. But we have received a profit. A profit worth how much? 1.5 million. 1.5 million. Are we together? So what do we remain with here? What is here should be equal to what is this side. If you get when they are different, just know you've made a mistake somewhere. So we start adding 7.5 plus 2.5 million, 7, 8, 9, 10. That is 10 million. Plus this, it becomes 41 million. 41 million plus 2, it becomes 43 million. 43 million plus this actually makes 73 million. Are we together? When you add all this, you still get the same, which is 73 million. Are we together? Then 8, they are actually telling us on the part of 8 that I paid rent for his personal house at shillings 5 billion to cover for a period of 12 months of 12 months using telegraphic transfer from business. Telegraphic transfer from business, that means he used the bank. Are we together? So that is actually a drawing from him. You also do the same. So you also do the same, but when you reach this side, you subtract the drawing, because you subtract the drawing by how much? By 5 million from the money this side, and then on this side you shall have to reduce the bank. Are we together? The bank which has started 5 million, you have to reduce it by how much? If you reduce the bank by 5 million, because it was 35 million, 35 million minus 5 million gives you 35 million minus 5 million. Reduce 5 million here actually gives us 26. And then you put in the rest and you get the answer. Thank you very much. If you found this video helpful, please don't forget to comment and like and subscribe.